So most of the experts are saying that the recession is very likely in 2023. So how we can earn good returns during the recession? So I personally made shy of 20% returns in the past 4 months, even when the stock market and most of the stocks were significantly down. You can see the screenshot of the returns, and I will reveal that calculated trade very soon in the video itself. So if you are following the news, you know that most of the experts are saying that in the first half of 2023 the stock markets will perform poorly because the earning forecast is not very good, and the obvious reason for that is the high interest rates. So if we believe them, until June 2023 the market will go down, and in the second half of the 2023, that is after June 2023, the market will go up because the inflation will cool down at that time as per the experts. So based on this information only, I have already made shy of 20% returns, and there is a strong possibility that we can make some more returns in the first half of the 2023. So what I did and what we should do for the 2023 is very simple, and there is no rocket science at all. So what we can do is we can simply short the indexes such as Nasdaq, S&P 500, Russell 2000. In other words, we can sell the ETFs which are tracking these indexes. Or the other option we have is that you can buy the ETFs which are tracking these indexes inversely, meaning when the market or the indexes will go down, the ETFs will go up. So you can buy those ETFs, and the both things are same. So if you are in Canada and you are using the Wealthsimple app, then the second option is very convenient to you, and you can buy those ETFs on Wealthsimple which are tracking these indexes inversely. So to give you some examples for the Wealthsimple particularly, then you can check out the HQD ticker symbol, and that corresponds to the 2 times inverse of the Nasdaq daily performance. And then there is a HIU ticker symbol that corresponds to the S&P 500's inverse daily performance. And for the US listed ETFs, you can check SQQQ, which corresponds to the 3 times inverse of Nasdaq daily performance. Then for the S&P 500, you can check SPXS, and for the Russell 2000, you can check RWM. There are some other ETFs as well. You can Google it and you can find out what are the inverse ETFs available on the US listed as well. So when these indexes, the Nasdaq, S&P 500 or Russell 2000 will be down, your inverse ETFs will be up. But wait, there is a very high risk with this trade. So make sure to consider the things which I have mentioned in this video in the chapter Don't Do This. Because you definitely want to know when to get out of this trade, because this is definitely not the long-term play. As we already mentioned in the video that just the first half of the 2023 there is a possibility that the market will go down, and we just want to capitalize during that period itself. So make sure to check out that chapter Don't Do This. So now let's talk about what I will do in 2023. So I personally like to short Nasdaq, considering the fact that it is a tech heavy index, meaning half of the index is made of tech companies including Apple, Meta, Google, Microsoft, Netflix, and others as well. So it is very likely that the Fed will keep the interest rate high in the first half of the 2023 until the inflation will cool down, and that high interest rate environment is definitely not good for the tech companies. So the Nasdaq will go down in general. And I would like you to research about the S&P 500 and Russell 2000's holdings, and want to know that how those companies and stocks will perform in the high interest rate and slow growth rates. So I shorted Nasdaq back in September with around 15% of my portfolio. So I bought HQD ETF, which corresponds to the 2 times inward daily performance of Nasdaq. So this is the dashboard from the Wealthsimple. I personally use Wealthsimple because I don't have to pay any brokerages on the Canadian stocks and ETFs. So I always say that there shouldn't be any single stock or single ETF that weigh more than 15% in your portfolio until and unless you are very confident about that trade and you have done thorough research about it. And it should not be long-term play for sure. There is one exception when your stock has given good returns and weighing more than 15%. So after some time you should restructure your portfolio and you have to get back to the normal, which is less than 15%. Now let's talk about the point which you must have to keep in mind. It is the most important part of this video because it is very risky to not know when to get out of this trade. So the first point is, do not sell or short the single stock, only short the indexes, because the probability of losing while selling or shorting a single stock is very high. It is very difficult to predict the move of a single stock, and shorting the index is relatively very safe. The second point, which is very important, is that it is a short term play. Keep in mind this thing, because the markets will eventually go up in the future, meaning all the indexes including Nasdaq, S&P 500, Russell 2000 will go up. So don't stick to this trade. So the third point is, set your clear goals for the returns. So either you should have some realistic percentage return expectations or a time frame in your mind. After that, achieving that particular returns or after that particular time frame, you should get out of this trade. So as per the experts, we know that the first half of the 2023 is not going to be good for the stock market. So I am personally aiming for that time frame. I would like to get out of this trade within that time frame, but I will definitely evaluate the situation in coming months with the new inflation numbers. So the last point is, select the ETF as per your risk tolerance, because there are some ETFs which are corresponds to the 3 times inverse of the particular index, such as SQQQ, which corresponds to the 3 times inverse of the Nasdaq's daily performance. So the volatility for that particular ETF will be high. So choose what is good as per your risk tolerance. So thank you very much for watching this video. If you like my content, please do like, share and subscribe the channel. And if you have any questions, feel free to comment. This video is just for an educational purposes, and please do not consider it as any recommendation. Thank you.